Good morning, everybody, and welcome to the April 11th issue of the Tucson Mortgage Weekly. Thank you very much for tuning in. Let's see, what's going on? Let's get right to the news, as they say. Okay, what happened last week? Well, earlier in the week, Bill Gross, who's the bond guru that works at PIMCO, announced and said that U.S. debt is no longer attractive given what's going on in the U.S. economy. That, of course, didn't help anything with interest rates, and that would pressure it higher. China and the European Central Bank also announced that they were going to be raising rates 0.25% based on fears of inflation, and that you may already know that gold and oil hit like forever highs, if not all-time highs, certainly pretty darn close to it. All of this is based upon a combination of the fear of inflation and what was going on in Congress relative to the U.S. basically running out of money. The coup de grace was, of course, as we went towards the end of the week, that they said they were going to shut down if a settlement was not reached by midnight on Friday. And as you probably know about it, at about 11:30 p.m. Eastern time, they came up with a resolution that they then worked through the weekend to fund. And so we have another 1 week reprieve for the Congress to come up with a spending bill and get it passed. Interestingly, how it built to this gigantic crescendo as the end of the week approached, and then it was passed, and we all kind of sort of moved on. Remember, the U.S. is banging its head against a $14.3 trillion debt ceiling, and so there's a big battle going on cutting expenses and approving a budget for the next year, or I should say for the balance of this year. It's going to be big wars coming up with budget for 2011, 2012, but that's already 6 months down the road. That's certainly future. Okay, what's going on this morning? The government funded the bill that'll keep us out of trouble for the rest of the week. And this week, what's coming out? Okay, first of all, a couple of big reports are coming out. PPI, which is Producer Price Index, and CPI, Consumer Price Index, coming out later this week. And so hopefully the fans that are feeding the fuel of inflation, hopefully that will remain intact, but I'm not very optimistic. I think, again, we've seen a little bit of a lull in the market. Rates are only going to climb from there. The Fed's also auctioning off $66 billion in debt this week. Right now, all of the indications continue to point for higher rates. How much and when? Anybody's business, but lower rates, the only way you're going to be able to catch a lower rate is if you happen to be ready to lock and you catch a dip on a particular day, but the trend is clearly higher. Anyway, don't forget to check out the blog site, TucsonMortgageBlog.com. I'm Todd Abelson. Thanks for tuning in and make it a great week. Bye-bye.